everyone, JG Invest here. Okay, so we're back on the EV train as far as what kind of stocks we're talking about, but we're not going to be talking about vehicles today. Thankfully, we're focusing on charging, specifically ChargePoint. So, I mean, there's been some huge run-ups with ChargePoint. Let's just go over some basic information here. Company's based out of Texas, founded in 2007. 1 year growth on it is 205%, which for a SPAC is reasonable in comparison to some of these other SPACs that are like thousands or 1,000 on the 1 year. 6 month, we're at about almost 100%. 1 month, we're at 14%. 5 days, 45%. And the 1 day is 11.76. This was before Easter. Pre-market today, it's at 3%. So the growth isn't unreasonable as far as some other SPACs that are out there, which a lot of people are against the SPACs just because of how many there've been. The reason why I think this one's a little bit different in comparison to SPACs is just for the amount of information that's coming out. We kind of see multiple companies shifting towards the EV sector. You know, other major car manufacturers are focusing on EV development vehicles. So, you know, why is ChargePoint the favored? Well, it owns about 73% of the market share of charging infrastructure, which is a big portion. The other thing is Joe Biden initiative of focusing on American companies, and this being American based is another huge bonus. There's just so many points that lead to you should take a chance with ChargePoint. A lot of people say it's not a chance, it's still a SPAC, things can happen, but it's looking really good. I think the previous high on this was about $45. The all-time dip was about $20, so it was a huge buying opportunity. We didn't buy in at the 20, we bought in around the 25, 24 mark. So still huge, really good gains there. So let's go over some talking points. But first, guys, do me a favor, subscribe and hit the like button. Trying our best to put out videos every day, and then leave a comment. I do read over all the comments. Someone requested a CCIV opinion video. We put that out as well. And then the Discord links in the description underneath. Okay. So some people are making the claim that it's losing money every year. Yeah, I mean, it's a big task to be focusing on charging stations and putting charging stations all over the place. There's a lot of money that goes into these, and it's for growth. And I know that the standard response is always like, well, it's a growing company, and that's always kind of like the wish-wash answer. But in this case, with all the supporting information and all the things that are happening recently, it's a little bit more sustainable, and it makes a little bit more sense. You know, the expansion is key, especially with the huge recent news with Joe Biden infrastructure on charging. So if you look at this as a hype stock, that's fine. There's still some wiggle room based on just the current price and the previous high before dropping 40%. Why did it drop? Well, I mean, most huge growth stocks did drop during the pullback on Nasdaq, and that's just how it works, right? I think all major growth stocks had a pullback. You know, NEO did, Tesla did. It's just what happens. So to lump in saying that ChargePoint fell down and, you know, it's not safe and this, that, and the other, well then, you know, these are the same people that should be saying the same about these other companies. And they're not. So does that mean you should forget about these stocks with huge growth potential? Some yes, but this one no. Just with the amount of planning that's going into place, and with the shift of other competitors starting to build more EV cars, I think there's going to be a huge focus for this. You know, these are the same people that are telling you wait for cash flow before jumping in. By that time frame, you know, ChargePoint's probably going to be an outrageous price point, probably be back to the previous highs. At this current price point, for the amount of development that's coming up, it's a steal. Again, this is a long hold, right? I mean, it's a big project, it's a big task that's coming into play. But that being said, it doesn't mean that you can't make some short-term money on this if you don't want to go in the long haul for this. I'm going to be going long on this. I will probably take some profits along the way, but that's my strategy for ChargePoint. Let's take a look. Where are we here? Spending amount, money on EV development. Why would you do that? My opinion on the current price point, don't sleep in on this, jump in. Has huge growth over the next 5 to 10 year mark, and we'll go over that. Joe Biden recently put the $2 trillion towards infrastructure. 28% of that, of which is focused on transportation of EV vehicles. That's a big chunk of money. The target goal is 500,000 charging stations. That's no joke. That puts the whole concerns kind of to rest to a degree when you have that much development going on and that much of a focus in the United States to get these charging stations up. I think it really does put a lot of these concerns away. Does that mean that the stock's going to ramp up? It's had a huge run up already over the last 5 days. I mean, I can't imagine it still running up, even though it's up 3% today in pre-market. It's going to have to dip a little bit, but I think from here forward, it's going to be a steady growth stock where you can just kind of keep buying the dips and let it grow and keep going from there. The EV charging sector has an expected target of 44% annual growth for charging, according to some analysts. So that's a big jump. They also had the reverse merger with Switchback Energy just about a month ago. So a lot of good benefits to it. EV vehicles are expected to be at least 10% of the cars on the road by 2025, and by 2030 it's 29%. And I think I forgot to write it down, but I think that it's about 60 million cars a year across the world globally that get sold per year. And with more and more car manufacturers developing their own EV cars, this is clearly a shift that is taking place, which reduces the risk substantially. Like the Mercedes looked great. Volkswagen did an okay job with their SUV, but you can kind of see that other car manufacturers are no longer sleeping on developing EV. They can kind of see the shift that's happening. They can see obviously that a lot of people are interested in it. Does that mean that they're the best option? No. I mean, there's other car manufacturers that are way better right now in the EV sector, but it does mean that charging stations are necessary, especially with the increase. Some people brought up that gas stations may start including EV stations, and that will probably put a damper on the entire EV charging stop stations. Realistically, I think it's fine. In my opinion, the pricing will probably vary to cover the cost of the footprint of the property, and gas stations really don't have that much available space to be putting in a ton of charging stations, I don't think. You might be looking at like maybe the 2 to 5 range, which at the end of the day won't really affect too much. People will probably be going to the bigger stations. And that being said, what's to say that Shell, Esso, and these companies wouldn't be contacting ChargePoint and they would do like a revenue split on this? They have the material, they have the technology. I'm pretty sure that they would outsource this. I don't think that gas station companies are going to be developing their own EV charging stations. So to me, that argument really doesn't make too much sense. It would be more so that they would purchase off ChargePoint or a competitor to do the installation of some charging stations at gas stations, and then do the revenue split. That makes more sense to me. I mean, frankly, like there's some McDonald's and fast food chains that have charging stations in place already, and it hasn't really affected major charging stations at all. And I think it would be more of like that kind of stop and convenience go factor of like, you're gonna go grab some food, let me charge the car for like 20 or 30 minutes, however long it takes you to eat, and get whatever charge you can get. and then head out. The payment strategy factor, I'm not 100% sure on how the revenue stream is going to come into place. I've heard multiple things. I've heard of a flat rate of like $10, for example. We'll use the $10 scenario, where you pay a flat rate and it's just whatever amount you charge. So some people will be there shorter term, some people will be there longer term, rather than this like charge up amount, which could be good and bad. I think a flat rate makes the most sense as far as like revenue stream goes. It just comes down to, again, this is all new, so it's going to be very difficult to kind of figure out. There's been talks about flat rates, and there's been talks about just paying as you charge per kilowatt. So, I mean, if there is a flat rate, that's a huge advantage in the sense of some additional revenue stream before in comparison to kilowatt hours. Then others, they might end up taking more than the $10 price point. We're using $10 as an example, and lose some money there. I think time will tell, and as more time goes on and as they collect more information, more data, they'll kind of figure out a scenario that works best. So overall, strong focus on EV sector. I think the EV train's back on track. I don't think we're going to see huge ramp ups like with NIO and Tesla and things like that, like we saw the first time around. I think the hype's kind of settled down a little bit, and now it's focusing more on reasonable growth. NIO was my go-to, and I'm sticking with NIO. And then ChargePoint is the one I'm gonna be focusing on and not Blink, solely because of the Biden strategy and everything like that. So a little bit of information on the growth pattern, where you can see it in 4 years from now to 9 years from now. But yeah, I think it's a solid bet. I'm holding my position on this, and then I'll probably fill up on some dips along the way. I'll probably wait a couple of weeks, unless if there's a substantial dip to take advantage of. But I'll probably wait a little bit and see kind of how well the stock holds up after this recent run up. But do expect a dip coming up. Other than that, guys, thanks for coming back, and see you soon.